Talk to me honestly. I'm here.
What's up, team? Good morning. CPI day opening irrational to the upside. DD bands break across the board. About to have a VIX risk interval move to the downside. Let's see how this plays out, and see if it pays out. We'll see in just a little bit. Good morning, everybody. Welcome. Smash that like button while you're here. Let's go ahead and get started. CPI is coming in at a wash right to forecast. 6 on 6, looking good. Market's rational upside. DD bands. Hold on 1 second.
Talk to me honestly.
Interesting setup, right? We have CPI obviously coming out, and the question is obviously with the bank failures. But a CPI not increasing, what is the Fed going to do? It's like Wall Street's perception. This is somewhat bullish. We took a little dip at the open and then push higher. Rockets get a pre-market check. We have what's called the DD band. This is how much the futures can stretch away from the index without causing unusual activity and irrational activity. Pressing beyond all three of those on the indices. So this is going to be an interesting setup. We might open 39.25 is that level on the S&P, and I'll be watching that pretty closely. I honestly think that, with kind of the recent events that we've seen, that the FOMC is likely going to probably, I believe, going to draw back all rate hike increases to zero and kind of float on that for a little bit to see, going to put the economy in danger. And I think that this is going to be an interesting, the idea that CPI came in at the forecast year over year is exactly why Wall Street perceives that as bullish. I think they're betting on no rate hike this next, despite what futures anything else says. I think that's where we're going. So, the next meeting. All right, guys, looking hot here out the door. Let's start in the DD band spot real quick. Okay, we're gonna run these up here. We got 3D7 and 11. Is that right? Hold on. 3D126. Let me double check this. Can we open in 10 minutes? We're good here. Good morning, everybody. So irrational to the upside is a different kind of irrational. So I like to take every excuse I can to be bullish. It's trade small, but I look for trades when irrational to the upside. One of the best types of trades is when it tests the DD band. As long as all signs come in positive and looking great, I can long off the DD band when it comes through. So as a support, but I'll talk about it in just a second. I got to get those on here. minute. 38. Oh, it's still not updating on the bot. I thought it was pulling in. Oh, wait. Okay, hold on 1 second. The DD band spot still has the old contract on it. I can roll into the new one. Manual. 895. Okay. I'm gonna manually do the rollover to the M contract. So that's what I'm gonna do really quick. 72. That's better. Okay, actually. Okay. So we're at 380, 868. And then 382.84. Setting up my side charts here, getting prepared. You guys want to set up how I do the pre-market setup? Just really quick, take a look. Over here in this one chart, I have all of my risk interval type calculations. I've got the DD bands on all three indices: NASDAQ, ES, and Russell. All three of them breaking through a rational band. So over here, I've got just looking at VIX. VIX risk interval down here at the bottom. You can actually push one that way. So if we do push up, remember when VIX hits that one risk interval, it sometimes likes to react. Doesn't mean that it's going to react in a sell-off, but just remember any upside target, I have to keep my eyeballs on this level here on risk interval VIX. Because create some kind of volatility in the market collapse. So the market can just accelerate from there or turn around from there. On the bottom side, I have SPY, QQQ, Russell, and UVXY for my liquidity maps to get started. So these are all going to be ready to go. Front center, main no camera. My 150K Eval account challenge and the 250K Eval account challenge. So I'm only $900 away from the 150K Eval. It's only been a week I started it. So if I can pass it today, that'd be great. What y'all up to today? Please lower the background music. It's hard to hear me. Oh, my bad. Even over this music? Let's lower it down. Smash that like button while you're here. I mean, just like click it aggressively. I'll have to click it once probably. Double checking our pre-market check every day. Just looking at the news, get all this front and center, liquidity maps, watching financial juice. Fed swap show odds of 25 basis point. March move steady around 4 and 5. I'm thinking we go to 0. I think we get a surprise. Market's behaving like we're going to get 0. Bank failures, can't imagine the Feds can just be any kind of aggressive. So we're starting to taper in on the commitment of traders, right? Shorts are covering, longs are not. So when these two are pinching together, as it's starting to look like it's hooking up, that becomes more liquid. Liquid markets don't crash, which is good, and dealers are negative, which means that the market is not, when I say crash, I mean the market's not going to collapse on itself when it's liquid enough. And still, this particular deviation, though, with people shorting against the dealers, that's not necessarily the best sign in the world for a non-volatile market. Anytime you see this kind of behavior right here, the market can be pretty bad and bearish, which we're seeing. A little bit of a hiccup, and as long as if the greens are starting to sell, which they are, the market's going to pull back. So we see that all the time with red and blue below 0 like this, red pushing up, blue pushing down. This kind of setup is not bullish usually. So you get massive amounts of shorts against the dealers, and as soon as the longs start selling, the market will likely come down. So as long as they're pinching together, it stays liquid enough. But if the blue is not covering, that would be the buyer. So if there's no buyers and no long buyers, then the market typically has become bearish with this type of distribution of risk in the futures market. All right, ladies and gentlemen, let's get ready to roll. I had a tickle in my throat today. How y'all doing? Everybody smash, yeah, hit that like button real quick. Go ahead and give me some algorithmic love. Oh yeah. Why are the alert buttons green? Because there's no DD bands on the alert buttons just yet. Yeah, so this morning, and Fed swaps are pricing in 25 basis point, and I think that's even without the risk of bank failures. That was something that was already going to come through. I mean, we can already see that the labor market implies that the Fed should not increase rate hikes and speed them up. And of course, with the looming problems in the banking industry, the Fed should not speed up even doubly, right? And so with those two things kind of being on the horizon and QT still not fully baked its way into the economy, that's 3 grand slam crash level effects that the Fed would be ridiculous to do anything at all but to go straight to raising rates 0. And that's what Wall Street is literally pricing in today. I think the CPI coming in at a wash, just showing that it's not the fourth thing that's damning the market. Wall Street is likely betting that the hand of Jay Powell is going to come in rather neutral and probably be at 0 until the summer. Now, I had a tweet a long time ago, and I predicted that we would be no rate hikes in this next month's meeting. So, and I think was predicting that worse things would happen that would trigger that. So maybe we're 2 or 3 steps ahead, maybe we're not. But I think that the clear as day push off of this, CPI isn't showing the inflation numbers coming down. The jobs market is showing a deviation between available jobs and available people to fill them. It's very clear to see that Wall Street does believe that Powell is not going to get more aggressive, and we're seeing that today. In the rocket scooter world, we're opening outside of what we call the DD bands, which is a rational irrational indicator. Helps me sit out, helps me decide if I'm going to take a trade or not. On the upside, I like to take every excuse I can to be a bull, so I'm going to be looking for some pullback support. I'm going to trade just NASDAQ and S&P futures today, so I'm looking at about on the NASDAQ 12,182 as support and 39.24 as support on the S&P. Keep an eyeball on the VIX. Volatility is collapsing very rapidly, and there's a key level in VIX we're watching today in VIX futures, 2261. That level is going to be a likely pivot in VIX itself, which could cause a little bit of reversal action in this outside of the irrational bands on the index product. So today I'm going to be looking for, obviously there's a lot of things gapping up. You're going to see some gap and goes on some stocks. So we're going to see if there's anything that any kind of plays. I know Ashton's going to look up some stuff on the scanner. Straight up, I'm looking for long entries from here on any kind of pullback. I'm not going to chase greens. Volatility is still elevated and high, so I know when VIX is high, I can, with confidence, almost guarantee that I can get some kind of entry or pullback if I did want a long. So one of the tricks is when VIX is elevated, actually all times, I never chase greens to long. I always have to have a little bit of a pullback. So I'm about to post my live stream link in my Twitter feed. So if you guys want to actually watch and play along if you want to watch and view along while we're talking about these things, I'll be having the charts front and center on the screen using Rocket Scooter. So I'll pass the mic on in just a second, and you guys head over to the Twitter feed in about 1 minute, and I'll post that up. Okay, give me 1 second, you guys. Okay, we're gonna read right out the door. We have S&P resilience positive. Yeah, I'm just looking at that right now. We're taking a look. At the data to see if it's coming through. It's probably just sometimes you'll get let me see data delays. Hold on 1 second. See if the data is coming through or not. We had a bug yesterday on the daylight savings time to see if it fixed it. Okay, so we have at least we have a long up for bull zone. So is it MHPs coming through? Okay, so we're gonna wait and see. I wonder what's going on. Let me pull the status really quick. Somehow our data is locked up again. These are correct. So I'm looking at this. I mean, but we're somehow monthly hedge pressures are halting up. Let me get the DD bands really quick on Nasdaq. Okay, so I do want to take longs up a hedge pressure when we pull back. Just a small one though. And let me put this in here, somewhere down in here. Okay. So we are irrationally upside. I'm only gonna take like a one small contract long off of 294 on the long side. Can you guys hear me? And maybe 230 here. So we got a report from our data feeds that data feed providers are having a slowness this morning. We just got a report back from our admin team. So as soon as the reports start coming through, okay. So keep an eye out today, right over here. So it's going to be a long up off of 390. The only thing we don't have is monthly hedge pressure. So what I'm going to do is just be off of 390. I'll take a one long contract, just one. Oh, I need to go through my settings. Dang it. Oh yeah, and you have to re-add show estimated P&L on the DOM when you roll it. Each contract is going to have that. Upside targets, let's look for gap fills just in case we have them. To go to a daily chart on SPY really quick. Nothing, huh? It's all internal. Okay. Let's go back. I'm going to go ahead and look at any upside red lines today. So I'm going to look for anything. Remember, outside the DD bands, we always go to red lines, yellow lines. Look for that. We have IRLs up here at 39.52. I'm going to go 2. All right. $39.59 is the target. That's absolutely true. One of the really cool tricks about monthly hedge pressure is the way that it works. So with these calculations that we do, all of our levels that we produce at Rock Scooter, they all predict high volume before it happens. So it's high volume in this particular instance is dictated by options and options hedging. So when we look at the monthly options, the closer you get to expiration, there's always more sensitivity to the price. The risk is almost, or I guess the probability is almost negligible for certain out of the money options to go into the money. So you're going to see hedge pressure or monthly hedge pressure start to exponentially decay towards where price will be instead of being far away when you're getting closer to expiration. So obviously this being expiration week, when you are right on the edge of monthly hedge pressure, you can get those sensitive days where the market moves. So typically in like a bull market, you'll run for a month, right? And you'll have like an up day almost every day. And then maybe a red day spread out every 2 or 3 days, you'll have a red day. But typically in bull markets, you'll see the market rallies towards the end of the month. And the last 2 days is when you start to get that rapid sell-off sometimes. And that does come from a monthly hedge pressure break. So it can predict that sensitivity right near the end of the monthly run on those options. So that's one of the things that is very telltale about that. So with monthly hedge pressure, you have to be very careful leading into that expiration week. Oh my gosh. I had selected this one right here. Boy, literally trade of 8. I thought I picked the right one. Gah! Okay, which one I want? I'm in the wrong contract here. There we go. I literally highlighted this one and it had me trading this one. That's okay. I'm going all the way up to the IRL at 39.59. That is my target. It's at 39.59. I did the wrong thing. So 39.59 is my upper target. Get that upper red line there. Resilience is still nice and positive, so that's good. So I'm going to say that we're at type 2 resilience. 390.5 is support, even though somehow our data providers have reported an outage this morning. Yeah. So we're good on resilience. So we're going to trade. I'm going to trade with what I have right here. I have 390. I have the DD band on the outside as support, as irrational markets. I'm only going to trade really small. And then we have 390 as support on hedge pressure. So any break of 390 or any loss of resilience, I'm going to go ahead and get out of this trade. So with the resilience being long and strong at 72, this is great. So upper red line, we have IRL from yesterday's pullback. About 39.59 is something I'm looking for. I'm going to double check on NASDAQ really quick to see if we have a target there. So from here, as soon as I hit that red line, I'm gonna go ahead and cut it. About 9 more points from here. Oh, I'm on the... So I went ahead and right out the door off at 390 balance on hedge pressure on SPY. I went ahead and took a long on the futures account. I am trading it up. There is a balance point on S&P 39.59. It's a nice 10-point scalp. That'll kind of coincide with the VIX support I'm looking for as well. It's just a quick scalp to the upside. All signs look good. Resilience, one of our best leading indicators, nice, long, and strong. It's about 70%. And that's really good to show that the gap and go is going to hold. If we start losing any momentum on resilience, I'll probably start bailing on any of this. But I think that we're going to get a second bump up just to balance yesterday's pullback in futures. NASDAQ's already ripping the new highs as I'm saying this. I bought on the dip, so my long was about like maybe 6 or 7 minutes ago. So I'm sitting here on this. It's looking really nice. Maybe do get another 10 points in the S&P, maybe another 30, 40 points on Qs, rolling up on here. So any long plays today out the door are looking pretty solid. I don't know if I'm that eager to buy long term at this point, right? There's a lot of variability coming to the market. With volatility collapsing as we're seeing today, it's just easy to see that the market's not going to have a lot of bouncing up and down today. This little V that I got to get in on is probably the only bounce we'll see for maybe an hour or so. So I'm liking it. I'm liking my trade. It's already up a little bit, and kind of looking for plays. It's going to be, the scanner pulling up anything that's on the long side. I think today is looking all right. So. No, it's not. Trust me when I say data providers just do sometimes have these problems. Whenever markets get crazy, it's like we have one of the best data providers there is, and still this is what happens. It's not something that we can control. Let's remember, Rocket Scooter's done something that nobody else does. We pull certain kind of data from this data provider that nobody else does as well. So they had to create all this custom stuff for us, because nobody on Wall Street does what we do, as far as needing certain things from the options data. We take that entirely huge snapshot right out the door of the market, and nobody has a correlation that needs that kind of data. So that's why we're kind of alone in that world. It's looking good here, looking good here. Yeah, great question. Actually, I won't even lie. I do all my trades before 10 a.m. I'm usually done by 10 a.m. But my style of trading is slightly, day tradey and scalpy. And all the stuff that we do, all of our prints with Rocket Scooter come out, and all the data we get comes out right at the open. So I usually try to finish up before the lull period at 10, as volume starts to decay after the first 30, 45 minutes of the open. You just get into the algorithmic world. It's pretty much all you see around lunchtime, right? So that's pretty much just noisy and random, and I try to avoid just trying to produce or predict trends when most people are at lunch. So, end of the day becomes a little more random as volume spikes up. We like to trade Rocket Scooter in the period where volume's in decline, and the algorithmic activity is high, because that is, like, on our end, like the most predictable spot for the style that we use. But as far as trying to, guess with traditional technicals, I would agree. When markets are chaotic with high volume, things like technical analysis completely outright fail, and they're not good at that period of time. So that's why we created something different that does kind of look at that period. So personally, me.
That's great.
Yeah.
Great. Could you elaborate on the difference between the traditional technical indicators that, quote unquote,
Yeah, actually, thank you for asking, Anthony. So traditional technical analysis takes an input of price and time and sometimes volume and spits an output of price, right? Technical indicators, for the most part, try to forecast price pivots and price action in the future, like direction of price. So if the inputs are price and time and the output is price, the technical analysis implies that you can predict future price of the stock market with past history of price, right? So in the mathematical sense, to me, that always was really hard to swallow and somewhat, I always thought as a new trader seemed ridiculous on the surface. How can the past predict the future? And so like with Rocket Scooter, our inputs actually are risk positions and options, and our outputs are volume at a price. So we don't try to predict price action and where price will be, but we can predict where volume will be at any price in the future. So it's a completely different paradigm. So an example is today 390 was a high volume, predictable high volume pivot just using options in SPY. And I longed off of 390 because I was a bull. So once I have my thesis or bias based on whatever I do use, Rocket Scooter uses the options world to forecast high volume pivots. And when you touch 390 on SPY, there was a massive volume spike. And so I'm either bullish or bearish from my volume spikes. And all of our calculations are the same. So traditional, I say, technical analysis tries to predict price. At a time, we try to predict volume at a price, time independent. So with that being said, there's no multi-time frame charts anymore. There's no confluence between multiple charts. I don't have to have a 1 minute, 5 minute, hour daily chart all open to trade one thing. I have one chart, never take it off the 1 minute. There's no overlay indicators on the chart because I'm not trying to forecast price. What? That's the 150 eval. When volume's increasing at the end of the day, for instance, right? Most of the activity, since weekly options expire on a daily basis now for the index products, SPY and QQQ, you start to get that expiration activity, right? Where people are either acquiring shares or not acquiring shares. And it becomes a little bit more random as volume is increasing. The market becomes random, and so it's hard to predict what's going to happen. So when volume is decreasing, markets become less human and more algorithmic. And so in the periods when volume is really high and there wasn't off of like a predictable pivot, we call that random. And so random markets I tend to avoid. Irrational markets I tend to bet small. And we have discrete indications that tell you what those are. Like there's some alerts on the Rocket Scooter platform that says market's irrational. Immediately tells me to trade small because volatility can be high. It predicts things like that. And so for instance, when you have non-random and non-irrational, right, all things check green, then I look at some pivot tools that we've created that also predict volume, but pivotable volume that I like to trade. Hedge pressure being one of them. It's the net maximum gamma of sold options to market makers. The way that we derive this is our algorithm looks at all options that are traded, and it assumes or determines through mathematics that this option belongs to a market maker that's hedging their position. This option belongs to a YOLO trader who's buying 2,000 calls in Tesla. And so when you look at just market maker options algorithmically, you find the options that are the most actionable in the equities market underlying shares that they represent, because they're going to be balancing their risk by delta hedging. So if I go out there and buy like 3,000, Tesla YOLO calls, nobody's hedging against that because they're going to expire out of the money with high probability. The options that will expire near or at the money or in the money are going to be hedged, and if not hedged fully, if nearer the money. And so we have an algorithm that looks at the options that are within a hedging. We have a hedging model that looks for just market maker options, so that when you know that net maximum gamma, which means maximum change in delta, which means maximum order flow, we just nailed on the last, that kind of talking point that everybody says these days, order flow. Order flow is the biggest, I guess, most popular thing in modern trading software, where people look or monitor order flow as it comes in. There's a lot of software out there, a lot of great software out there that monitors and looks at order flow or unusual flow. You guys may have heard those words lately in the last 5 years. And that's a really big popular thing. So what we do is we can predict where the unusual flow will be before it happens, instead of monitoring it as it's happening to get a head start. For instance, with Rocket Scooter today at 390, SPY was going to be quote unquote unusual flow. And when all the software out there is saying, look, it's unusual here, we're like, well, we saw it, from the moment the market opened, because that specific area is going to be high algorithmic activity, because market makers will be hedging likely those options that they sold. The market makers that sold options to market makers that market make the shares. It's a triangle between traders and those two market makers that create this kind of activity. So the ones that sell options have to go back to the equities market and buy or sell those shares because of the exposure to sold options. If you sold a call that goes in the money, then you need 100 shares per call to fulfill that obligation. American style options can be exercised at any point in time. That's why we assume that they're going to be hedged at a certain time, and high probability that certain levels will have the most amount of hedging due to those sold options. So if you can filter out which ones you mathematically believe belong to market makers because the rules they have to follow in regulation, then that's where Rocket Scooter was born. We wanted something that was consistent, and delta hedging is something that's always done by anybody that does sell options that doesn't want to acquire the shares, which would be quote unquote market makers, right? So that's kind of where our cool technology came from. Hedge pressure and monthly hedge pressure look at the same balance, but one's with weekly, one's with monthly options. We have a couple of cool indications that are bias indicators. One looks for real traders that would have bear, we call it bear zone and bull zone. Bull zone is real bullish traders that are going to be long the shares or are long the shares in periods of illiquidity where it's almost probable that a market maker is on the other side of their trade. So we can say like SPY today is in the bull zone, and clearly it's rallying up a little bit. We have another indication that looks at the probability of gap being filled on any index product. So if the QQQ gaps down, I have an oscillator that lets me know the probability that the gap is going to get filled, or if it's going to be a gap and go. Like for instance, today, that indication showed SPY was a gap and go. And that's arbitrage between the index product, the basket stocks, and the index product itself. So like all these clever tools we have are trying to predict where volume will be based on different probabilities and certainties of how we can calculate that. And then of course, removing technical analysis gets rid of that whole effect that, you'd have indicators that were delayed or indicators that are relying on past price action or get chopped up on volatility. The most important thing in Rocket Scooter, and a long-winded answer to kind of talk about all the things we have, is that when technical analysis, right, indicators, people use just complete, silliness sometimes and draw shapes and colors on their charts. For the most part, they don't know to turn themselves off, and that's the biggest problem in technical analysis. They work all the time, quote unquote. They're always looking for signals, no matter if the market jumps up 5,000 points or not. They're always trying to produce a signal. And Rocket Scooter definitively has rules and settings that say this is the only time period these things are valid. Turn them off when these rules check off. So it's a self-regulating thing that allows you to know when your analysis method has integrity or not. And that's where the whole Rocket Scooter mentality came from, is that not everything works in every situation. And that's a whole new thing, is turn your indicators off when one of these five rules check off. And that kind of rule-based analysis and rule-based trading is kind of the philosophy that we have here. What up, Ashton? I know he has his hand raised. I'm gonna talk for a while.
So, Anthony, one second. I appreciate the question because
I'm sorry.
this is really, really fun stuff to talk about. So for me, option swing trader. So
Oh, what's up?
I use
Oh yeah, yo, hey, I hit my target. What do I do next? My bad.
how I use. So my main thing that
I'm not even, dude, I'm so distracted right now. I've got like 10 things going on. I guess I passed my eval in the first week. That's cool. What do I do now? I don't know. Does it automatically suggest? Send me a message at Discord. I don't even know. This is my first time to ever do one of these things. Is it automatic? Cool. Okay. Okay, so here's what's going on. We have a red line up here. We got really close to it. Yeah, okay. Actually, you know what? Possibly. It's very close. It's probably going to be about right here where my mouse is. You see right here? So as soon as we touch the IRL, we should be good today. Can you guys hear the music? Sorry, I know Tuesdays get a little brutal because I'm on the Rocket Scooter podcast today. Let me go ahead and make like a post on wow. All right, let me do a little post here really quick of the give my old ETF a little shout out here. You guys are welcome. You guys are welcome to retweet if y'all want. I'm gonna post this up real quick. Let me do a little tweet here. All right, I went ahead and made a Go, go, go. All right, let's see. End of days. 150 static hands down is your favorite account they offer. Then end of days. I think it's automatic. There's a need to email us. We'll reach out to you within 24 hours. The next steps. As long as you have 5 trading days. Yeah. Process your credentials up. They process the trading day around 3 or 4. Oh, cool. All right, data's finally starting to come through, you guys. That's incredible. We had some errors, say, with our data providers. I'm looking at some diagnostic reports. Even sending manual calls, we're getting weird data on the raw side. So our data providers had an outage this morning, so we're sitting there dealing with that. So that's basically it. There's still a red line up here. I'm going to post it up here. This is one of our illiquidity pivots. So illiquidity pivots come from another calculation that we teach. There's a class on this. This comes, I think, in the module 2. No, module 3, where we talk about entries and exits. Module 2 is entries, module 3 is exits. This is a particular, we call it impact red line that we have from yesterday's move. This being fulfilled, if there is any upside push, that is my upside target to have this fulfilled, the S&P. NASDAQ doesn't have one, so the S&P is the only one that I'm looking at. To confirm the trades being nice and steady, we did have DD come through finally. 0.61 DD is nice and great on the positive side. So this is greater than the buffer. Right, when irrational, what's the buffer on DD? 0.6. My best student over here behind me, 0.6. Did y'all hear her? Learning DD as well. Greater than 0.6, which is great, means we stay in the bull zone. That doesn't necessarily give me a lot of confidence, you know, of any kind of move from here, but it does tell me that we don't fall below 386 today with a lot of certainty. It is dropping a little bit, but it's still, you know, kind of on the edge there. Resilience being at 60, that's very strong and positive, and we are supporting the upper open band on the resilience, right? So whenever you're using type 2 resilience, which means you are outside of the bands, the band itself can be support to the next resistance. If this is greater than 10, right? We use a 10 buffer on resilience as well. I just want to do a little humble brag here. I was, you know, Elite Trader Funding, right? The trader funding program. I've never done one of those before. I've always traded my own accounts, you know, on my streams. And I just started doing one of those trader funding programs, static eval account for $150,000 funded trader account. In a week, I passed it. So I just passed it just now, the trade I just made. So that's kind of a fun little humble brag off of that. So you guys remember the Elite Trader Funding, Ashen? Remember those guys? We met them last week. I don't know if you've been trading futures in the options world, but the limit on that particular account was up to 5 contracts. You have to trade for 5 days and have a certain, you know, you can only have certain drawdowns and certain daily loss limits, and so they're really hard to pass if you're getting new to trading. So it's a testament to how well you can trade with risk management. So that was the 150 static. And if you remember that one, Gob. The IRLs from yesterday. So, click on it. What's that? Yeah, that's okay. Left click, stop order. So you can get rid of the click limit order. That's okay. So what you don't click on is close this. So you see how, don't click where the reds, like, okay, move your mouse right here. Like, okay, move your mouse there. You see how it turns a little green bar right there? Move your mouse here. Nothing. When you see a little green bar, it means it drops an order. So what a limit order actually is, So a limit order is where you announce to the world that you do want to buy at a price. So right now, you see how there's a green and red on my screen? These are people that want to sell, and there's all kind of orders here, and there's people want to buy. There's all kind of orders here. It doesn't show them all because the way we have a Trade-Evate and the paper account only shows the ladder. So it looks like this, like the right side is like a stack of reds where my right hand is, and the left side is a stack of greens, and it moves around like this. So it's all the people that want to sell and buy, like an auction, yelling, screaming at each other. So if I put like my mouse right here, that's a limit order of one. I'm in line at 346.50 to buy one. So if the trading price comes down there, it fills me there, and that's called a limit order. Yeah. So you can do a limit order, or I could put my mouse, and I can put my mouse anywhere up here. If I want to buy, if I right click, it means I want to buy. So if I put my mouse here, I want to buy, and I right click here, it means I want to short. So anytime that you want to buy higher than the sell price, you get filled in what's called a market order. You immediately get filled. So if I were to click like right here at 359, it'll give me a trade. If I want to buy lower than the buy price, called the bid price, then I just sit here on the books. You can always cancel it with an X. So that's how that works. Limit order is like, you say I want to buy here at this price, and you get that price no matter what. A market order, you have to buy to the price people are selling at. What up, Matt? Looks like you're locked into a solid one today. Nice job. Thank you, Maddie B. I think Nicole herself has been learning some trading too, so she took a second trade from here to get to that red line. Close it out. Good job, Nicole. I didn't take that trade, but you did. 800 bucks. Good job. You guys got to pat Nicole on the back, my #1 student over here. Which one was that in? Oh, that was in this one. Ooh, you were halfway done with the 150 yourself, and you are 40 something percent through the 250. Nice. Nicole over here killing it. She made that funded account. Sugar mama. Nicole traded better than Karan Samosa. You remember Samosa, right? From Twitter? Yeah, that's him. Karan. Nicole traded better than you. You come bring your chair over here, man. You can put your chair next to me. And then you can look over my shoulder, and I can personally mentor you. So this is basically it. So my trade today, anytime you're outside the irrational bands, I always trade, especially if resilience is as strong as this. I took a long trade off of resilience, upper open band. This is resilience 101. This is a very simple thing. This is called type 2 resilience. Anytime you're outside of the band acts as support if this is greater than 0, right? If the markets are irrational, you have to change that buffer to be greater than 10. And being 60 is very long and strong. I'm trading it just to the next resistance. The next resistance, because we are irrational. I don't trade for long. I get in, I get out the next resistance. The next resistance is a red line, which is called impact red line. Was right there at about 39.60. So anytime, this is just a rule of thumb, babe. Anytime you are irrational to the upside, I'm more willing to trade irrational to the long side than I am irrational to the downside. I don't like shorting that much. Trader funding programs especially, you want to not short. And the reason is when markets fall, they're choppier, so it's easier to hit drawdowns. When markets rally, they're smoother. Right? Okay. So one of the best tricks on the upside when irrational. See, inside of the bands, right, we use all kind of rules to exit targets. And if you guys are paying attention, students, and by the way, if you guys have not checked out Rocket Scooter, do this really quick. We have a $35 a month extended trial for our $200 a month package, literally for 3 months. You can hang in here for 3 months for a total of $105. Click that link below, sign up. The door closes on our 1,000th extended trial member. We're getting there. And no more extended trial. This is a one-time thing that we're doing. If you guys want to check it out and learn everything we teach, very much worth it. Okay, so here's the trick. Exit targets, right? So here are our ways our exit targets work. The rules are anytime you're trading, I exit at a liquidity pocket. And don't worry about how much I exit. I'll talk about that later. But if you're thinking about it, you need a risk and reward, the reward side, liquidity pocket's one of the exits I'll take if it's available. The opposite wall of an illiquidity pocket, so IP, other wall. So in the bull zone, I'd exit on a bear wall. On the bear zone, I'd exit in a bull wall. So liquidity pocket is the middle of a bull and bear zone, where bull is on top. So if you want to kind of like write this down, just as a little reminder, and Amarath is making some really cool graphics for everybody. So if it's B and BR, if you want to write it like this, in the middle, the exit is the middle between the two. When they're the other way around, when the bear zone is above the bull, this one is called an LP and this one's called an IP. The two different ones. You exit at the wall itself. So liquidity pocket, the middle is the target. If it's the other way around, the other side of the wall is the target. Either way, you're looking for like opposing positions. Bulls looking for bears, bears looking for bulls, etc. So those are the two easiest ways to get out of something. Another thing is when you're inside the DD bands, trading to the DD band is a scalp target. So that's also an exit target when available. The DD edges. So we're going to do one is, we call it walls. Two is DD. So these are exit targets, right? Come on. So one is, we'll just say walls is a hint to what like the section is. Two is the DD band when inside. These are exit targets. So when I'm trying to trade to something, I always trade to something. And then we have illiquidity pivots, which is going to be red line and yellow line, which is one of our more complicated techniques, but it's the most useful when irrational. So useful. So when inside the DD band, the DD band itself is the exit targets. Useful outside the DD band, we'll use red line, yellow line. And I'll summarize that today in today's summary video. You guys follow? The last thing is gap fills, if available. That's a more longer term thing. If you get one, you get one. Gap fills on the daily chart, or gap fills of unfilled gaps. Yo, Spence, are you in here? In the YouTube? My buddy Spence here sent me a message yesterday. He goes, if CPI is cool tomorrow, he was talking about fundamentals. He goes, if CPI is cool tomorrow and 50 basis point odds return to nothing, which, right, it looks like Fed swaps are pricing in 25, but I think we're going to go to zero. I'm not going to lie. There's too many bad things going on. He says, if we haven't already ripped, make sure you buy or at least don't short no matter what Rocket Scooter says. He nailed it. He's like flexing right now. He's like, hell yeah, I got it. Yeah, basically saying that, yeah, we're gonna rip, right? And this is what we do here. We do a fundamental thesis, try to get a step ahead. Right, so with all this bad news, the Fed is not going to be more hawkish. They're not going to push harder. We know that, right? Yeah, can you ask that really quick? Sorry, I was in the middle of talking when you asked that. Sorry. Oh, absolutely. Okay, thank you. Let's open this guy really quick. So what the liquidity map is, it's a neat way for us to say, if you want to think about what a treasure map is, right? A treasure map is a piece of paper with an X on it. There's no guarantee that you're going to find treasure under that X, but there's a 100% guarantee that you're going to dig at that X to look for that treasure, right? So a liquidity map is that same philosophy. It's that we separate 3 of our most powerful tools in the options, market maker options kind of series of our calculations. Bull and bear zone is one of them. It shows that you're either on the illiquid or illiquid bull or bear side of any stock. So for instance, SPY today is on the bull zone. It means in this area, there are more people that want to be bulls than want to be bears. It is exactly how it's positioned in the options. It's kind of like you're staying on top of a mountain and you're looking into the landscape. You can see where the bulls are positioned and bears are positioned. These are institutional positions, right? So the letter codes of liquidity map are showing me where bulls are stationed and where bears are stationed. That's 1X on the treasure map. So that B stands for bull, just means SPY's in the bull zone. The L is the price's current relationship above or below hedge pressure. And hedge pressure being that maximum order flow in market maker options, whereas that predictable high volume pivot we talked about this morning. L just means there's more long orders than short orders if every trader were to take their hands off the wheel and just the algorithms that are delta hedging were to take over. So the L part of those 3 letters stands for long, means there are more long than shorter. It doesn't mean I'm longing, but it means the algorithms would be longing more powerfully than shorting above hedge pressure. As you see 390, where hedge pressure was, being an L, quote unquote, for SPY, was where that support was, because if just left to the algorithms, they're going to long a little harder than short. That's how the balancing act works. The third letter D is it's up or down. They're just designations we gave, and it has to do with the relationship between weekly and monthly options. The model works slightly differently to anticipate what happens with monthly options and weekly options. There's some distinguishing factors that you don't need to all hear about all the science behind rocket scooter, but D just means monthly hedge pressure is above weekly hedge pressure, and U means they're the other way around. So it's almost, if you can think of something that's relatable, moving averages, right? A fast period moving average like a 10 and a slow period like a 50. When the 10 crosses above the 50, then the market's got momentum to the upside. So if hedge pressure is above monthly hedge pressure, remember these are calculated from options, not price, then it's almost, you can think of like moving averages crossover. It shows risk momentum to the upside versus risk momentum to the downside. It means hedging momentum. So the B, L, and D, B and L is bull and long. So you're in bull side of institutional position, long side of hedging. And D just shows there is a nearer term kind of reverse, right? It's down, which is a little bit of a downward pressure because monthly hedge pressure is above weekly. Long story short, you put those 3 together, it gives you some letter codes, and you look on the map, which is on my screen right now, and it shows me where those balancing acts take place. You have a long pressure up, you have bull pressure up, and you have that down pressure down from monthly hedge. So you can see how 390 ran into monthly hedge and it's kind of pushing down. And so between those 2 areas are the X's I'm digging at. If I'm bullish or bearish, I'm just trading between those pivots. And liquidity map shows me where buyers and sellers can find each other, so I can help plan a trade better than just trading to some arbitrary value or buying on some arbitrary candle. So the letter codes are one of our best tools to use, because while traditional technical analysis tries to predict price action, we know where buyers and sellers can be, right? Where the pivots and high volume can be. And I trade only at the pivots. So today, obviously BLD on SPY, you can see that when that implies is that there's resistance between the 2 hedge pressures, right? If you look on the map, it shows there's down pressure from monthly and up pressure from weekly. And the weekly to monthly trade is the little scalp that I took. I bet that there were buyers. I happened to be right. Traded and exited where I think there would be sellers, which is right at monthly hedge. So I use it to literally show where I'm going to stick my shovel in the ground and dig to look for volume, which is exactly what you're doing. And then it comes down to, using any traditional method you want to formulate a bias, or even using rocket scooter tools to pick a bias. Today, my bias was long because of resilience. And resilience and DD are our bias indications. Both of them are really strong and positive. So I took the long side of the bet when hedge pressure you can very well short at as well. And the long side happened to play out. So that's just kind of giving like 6 weeks of training and 2 minutes of talk, but that's what all of our things do. So the letter codes just indicate the relationship between all this automated buying and selling in these positions. And then I use that to forecast volume where I'm going to make my entries and put my stops. So what's up, Anthony?
Hey, that's awesome, Rocket. I just have actually two quick questions. So I'm in the national now. One, does it matter if related? On it, ask for a code. By default, it has an SMS code there in the text.
Yep.
I'll let you elaborate.
Yes, sir. So Pro is our full charting platform and tool suite. So essentially everything, Lite is more like a mobile-friendly condensed version that just has some of the calculations in it for people that, for instance, are on the go or don't want to open like a live streaming trading platform at their place of work. It's like a call and response. You can say, I want the hedge pressure for Apple. Lite will say, here it is. So you want a full charting experience where you can draw indications, you have alerts, a scanner, that's all in Pro. So you should have access to the Pro. You just click it, it opens up. The SMS is just to confirm you, for your own safety, just like any other platform would. So it just should send you a text, you put in the code, and then it authorizes you to access your data.
And what's the code? Is it supposed to text?
Yeah, it's a SMS. So you just you put in your just any other SMS verification. You'll just type in your phone number, and it'll send you some digit code, and then you just type it back in.
Oh, okay. So you put your number there. Okay, cool. Thanks, brother.
Yeah, no problem. Yeah, we do. For you guys' safety and privacy, of course, we make sure that you have SMS verification so that obviously at some point in the future, Rocket Scooter is going to be connecting the brokers. So you'll be able to actually execute trades through your brokerage account through Rocket Scooter. Things like this are done for safety and privacy purposes, just so that others can't access your account, without it's the kind of the introductory part of like two-factor authentication, right? So that'll lock your account to your phone number, so that way you can access it in case you forget your password, or enable two-factor when you can connect your brokerage account, because clearly all of my brokerage accounts are all two-factor. I want somebody finding my phone and going in there and trading for me. Well, maybe they'll make better trades than I would. Who knows? But seriously though,
Yeah, I'm an idiot. I didn't even see, because I have my D&D on the phone. I didn't even see it was the way how to do it. So I got the code. Thanks for elaborating, man. I appreciate it.
yeah, no problem. After, as a matter of fact, as soon as I close my live stream a little bit, we'll probably hop on Zoom. If you go in the Discord, and like I said, everybody here, we're doing this cool thing, and I appreciate you, joining and checking out, Anthony. We have this, and I know we'll put a link at the top, but our full package is Love you guys. Danny Reynolds, linking to Trade-Evate would be great. How long? Well, here's the thing. Trade-Evate has a Trade-Evate has a limitation for third-party developers. The merger of Trade-Evate with NinjaTrader has kind of closed the doors to third-party developers to develop a redistributing piece or redistributed software that allows API connection as a blanket. But Trade-Evate does have an API for personal use. I'm not sure if it's been discontinued or not because the merger with Ninja, Trade-Evate is trying to sell the NinjaTrader platform as a business unit. I've talked to everybody in that company, all the way up to the CEO, to try to get answers on what the plan is. And they're all real hush-hush about what they want. It's a business change, so fingers are crossed that they open the door for third-party developers, but I'm going to say the chances are very slim because now that Trade-Evate owns NinjaTrader, NinjaTrader's business model traditionally, before NinjaTrader was a clearing FCM. See, Trade-Evate was a non-clearing FCM. They cleared through like Dorman and Phillip, I think. And now that NinjaTrader became its own clearing firm, they're called clearing FCM in the futures world, and they merged with Trade-Evate. Trade-Evate essentially bought them out, kept the Ninja name, and so selling the platform is one of their major business units, right? And then that was before they became an FCM. So now one of their major business units is commissions on trades, right? Now that they're the clearing firm, they get the commissions and the clearing fees. So, inspiring users to trade through Trade-Evate's products, which is NinjaTrader now and Trade-Evate's platform, is probably their main business focus. And as a CEO, I'm just trying to think, what would be going through Rick's head. And clearly, anybody that's a third-party platform like us would be directly a competitor. It would be disadvantageous to open their doors. And I completely understand their decision if they don't open that API back up for developers. So if they don't, then we wouldn't be able to connect your Trade-Evate account or your NinjaTrader account through Rocket Scooter. But that's up to their discretion. So, I think it would be in their best interest to do it because folks like us would bring users to their brokerage services. But if they're trying to sell the platform, maybe right out the door, it might not be the plan. The API has been shut off to third-party developers. So like TradingView is like the only place that can connect to Trade-Evate because they have an old legacy API that's no longer supported. And they just are grandfathered in. So that's how TradingView can connect to Trade-Evate, but nobody else in the industry can connect through Trade-Evate. So unfortunately, they closed the doors. You said it backwards, Ninja bought Trade-Evate. I thought it was the other way around, and they just kept the Ninja name. If I remember correctly. But again, like I said, I didn't pay too much attention to the details of who bought who. My brain tells you it was Trade-Evate bought Ninja, and then kept the Ninja brand, but I could be wrong. But in either case, Trade-Evate has a personal API that's a service you can actually go to your settings and subscribe to it that allows you to take your application and write your own software to connect to your Trade-Evate account. And I know that was something you could do, like if you wanted to create your own local platform to trade, you could connect to their API individually. So the question I'm trying to talk to them about is that still available? Because you have your own individual connection through whatever program you have, then we could write something around that. So if not, the other thing is if you can't, we'll have every other FCM on the planet to connect to when we open futures. So while it may not be Trade-Evate, we'll have everybody else to connect to. Everyone else allows you to pretty much connect to them. So we'll have infinity brokers here to connect to, hundreds of them. You said it would be okay to use another funding firm to take profit. You wouldn't be able to connect through Tradeovate. So Tradeovate's like if you want to think of a good way to think of it, think of Tradeovate as like Apple. It's now an all-in-one. It's a platform, it's a broker, it's a clearing firm. You got to buy your own fucking chargers to plug into Tradeovate. They redesigned the phone charger in a way. So imagine it like a Mac. You buy it and it's it. You can't connect anything third party to it. Very much like the Apple of futures trading. So if that still is the case, like I said, the merger is still, they're still ironing out like the final, final business plan. I'm sure is, there's still, whatever, obviously, whatever their strategy is, it's not something they're just gonna like say, oh, hey Matt, here, like in a phone call, let me tell you what our strategy is. Obviously, nobody's advantageous to reveal to their competitors their strategy. But if I were to guess, which I think Tradeovate's my favorite broker on the planet. I love them. I wish personally that they would allow third-party API connections, because I would use it non-stop through Rocket Scooter. So what you'll have to do is open a brokerage account with any of our participating futures clearing merchants. So you'll have a list to choose from. So like we'll have Dorman and Phillip, for instance. Like, so I'll probably just open a Dorman account and trade through Dorman. We'll have a UI similar to Tradeovate. We'll have a DOM and reporting features and all that stuff will be similar, right? So as we have a charting platform that we're making, we'll have all the same features. You wouldn't need to think about Tradeovate. You could just have any other brokerage account you want through futures. So, but ideally, I'd love to just continue using my Tradeovate service through Rockets here. That would be hella dope. So it would be okay to use another funding firm if they're in our list. Like I said, when we reveal who is in our list, it's basically that. But like I said, if I were to take a guess, most people trading futures through Rocket Scooter will be trading through Dorman or Phillip, which is what Tradeovate used to do. Whenever you first started, Tradeovate was a non-clearing FCM, and they cleared through Dorman and Phillip. So when you would sign up, quote unquote, for a Tradeovate account, you'd also sign some paperwork that would sign you up, quote unquote, for a Dorman account. So you were like trading through the combined broker/clearing firm relationship. The difference is we won't be an FCM. We'll just be a tunnel. So you'd have both brokerage service and clearing service through one of our participating FCMs. So like we'd be like what Tradeovate was 3-4 years ago. So now Tradeovate Ninja is a broker/clearing firm all in one. It's like, good for them. I was one of Tradeovate's biggest. I was actually, my original Tradeovate account was V0067, I think, which means I was their 67th customer they ever had. They used to sequentially number their accounts. I'm sure Ryan Hansen was 1 and Rick was 2. So DTB Ben, which is one of the founders of the old Day Trader Paradise, his account was number 11, I think. He was like their 11th or 12th customer. So we got in to Tradeovate back in the day because we knew Ryan, and we heard about it from him directly. Like, yeah, we've launched this, and I was like, I want in. And so we were that old school with them. So I love their platform. Their mobile app Pulse is the best trading mobile app I've ever used. It's better than everyone else. There's nobody better. The reason I say that is because as a trader, you don't want a bunch of noise on it, a bunch of fluff. You have the chart and the DOM and the order button all on one screen, and it's done so elegantly. It's simple. It's like, what I like about it is that it's simple, like a Michelin 3-star restaurant, right? What makes the food delicious? It's just perfectly balanced, like good sushi. Sushi is just fish and rice and vinegar, right? And a little bit of soy sauce. But when done in that perfect balance, it's like harmonious. And I love that the Pulse app with Tradeovate, it's like a commercial for them, but really it's perfect. I wouldn't change a thing. Like every other app, I found some kind of thing I don't like about it. Like TD Ameritrade, you have to go through like order confirmation screens. Webull, you have to go through so much noise, click all these different buttons to access different things. Tradevate is like, boom, here it is. Boom, here's my order. Boom, let's sell. Boom, here's my P&L. It was done like for traders that are like professional or full-time traders to do as much as you can with this little noise to get in the way, which I loved about it. That's like my favorite. So that's what I loved about them. Their desktop platform, not bad. It was right out the door. Even their vanilla platform was really good. And of course, you know, since I don't use technical indicators, I don't need a bunch of fluff on my charts anyways. So their reporting also on the desktop platform is my favorite reporting. I love their printouts. Like I just tweeted mine. I mean, it has like all your stats on it, your risk and reward. I mean, sorry, your drawdown, your run up, your expectancy. Like it's a really nice reporting feature. It's nice, it's pretty, it's clean. So as a trading platform, I mean, it's got all the necessities without being fluffed up. It's just like a nice little elegant piece of machinery. So I really love what they built. That's why I supported it early on. So it doesn't take up a lot of real estate. I can get all my information, a nice little column for streaming. It's kind of ideal, right? Because it has everything I need just really close to home. And Take Profit or Great Funding Co. Quant Tower compatibility. Can't reveal who our broker list is just yet. But I can tell you there's not going to be many people that aren't on the list. We're going to be able to connect pretty much everywhere. Futures, stocks, options. You'll be able to trade everything through Rocket Scooter by the end of this year. Mark my words. Everything. We're in the process of likely partnering or working to partner with and I can't even tell you what. I'm just getting a massive partnership. Massive for options trading. Imagine a number you're in your head and add 2 zeros to it when I say massive. In Canada too. We're going to expand as much as we can. To global exchanges if we can. Global data feeds if we can. Global options feeds if we can. Yeah. We will work. As far as like the highest priority, clearly our highest priority is US brokerages since our headquarters and all of most of our customers are US based, but not all of them. We have a huge member base of global and Canada non-US traders. So clearly we are listening and we will cater at some point. It's not the bottom of the list for sure. It's certainly something we need to explore. So the things that we're looking for, other brokerages, yes, if available. The industry is such a convoluted spaghetti bowl. It's like if they allow it, we're gonna get it. Who out there sells data? We can get it. Not everybody sells data. So the thing is that what I'd like to have is hedge pressures in the DAX and the FTSE and the Shanghai Composite, right? That'd be great to have 24/7 hedge pressures calculated. If I could find Chinese options exchange to sell me data. Not everybody can sell data for us to calculate a hedge pressure liquidity map. Right? Forex doesn't have options, so we can't calculate liquidity maps, right? So not everything has that ability to be useful or fruitful to us. But if there's available data, we eventually will get it. So keep your fingers crossed there. As we expand, clearly we're going to have nothing to expand to. We will always expand somewhere as we grow global. So while first priority is US markets, it's not the only priority. That's for damn sure. The convoluted spaghetti bowl. Oh yeah, you've used technical analysis algorithms before, huh? The convoluted spaghetti bowl technique. When these two lines cross over, and it happened 3 times in a row in a 5-minute period with an arbitrary 35 tick stop in a 16-minute time frame, where the green line crosses the pink and it ties a knot with the orange, and the meatball falls off the table, you long while standing on your head. Don't worry, it'll work. Oh, you see the broker statement? Oh, no. Just take my word for it. It'll work. Trust me. Red line hit. Market hit. Easy peasy. Past the 150 eval. How about them apples? What only took me 5 trading days? I think Tuesday to Tuesday. This is day 6. Boom, boom. Easy peasy. Not counting the Monday where I just reset the account when TradeAbate data went down. I'm going to call mulligan on that one and say this is my first attempt and I beat it on my first try. Even though the very first day, TradeAbate data just bloop and froze up. And I lost it because I reset. Technically, that wasn't fully in my control, so I can call mulligan on that one. So this is my first serious attempt at an eval. My first attempt. 150,000 funded account. Pass it in 5 days. Now I'm going to go for the 250. It goes, I need 15K profit on this one. I'm a third of the way there. So I'm about to get 2 funded trader accounts. Like I said, the rules are hard, but if you know what you're doing, and I teach a trader funding program class that people have said is one of the best classes I teach. How to pass a trader funding program. There are tricks and techniques I've used this entire time. My P&L, I think I traded 80% win rate on this one. And I tweeted my broker statement like I always do. Fully transparent. Love it. Love it. You can take a look at it. 80.95%. Run up to drawdown ratio of almost 4.5 to 1, which is exactly what you need to keep, a really high run up drawdown ratio. My trade today was an irrational trade outside of the DD bands to the IRL, which is here to here. IRL has been tapped, so class, what we do, we delete it. We know we do. Next step, anchor point on the bank failure move right here is probably the finality of this. But that move there was pretty textbook. We talked about that today. Picking exit targets. We'll do strategies today. And we do our Zoom call in just a minute. So everybody head over to the Discord. It's in, I think, module 4 or 5. Bam, everybody come Discord. I'll walk you through it. Will I continue to trade this counter, a new challenge? So I'm still doing my other trading challenge. And this one, I just want to see if I could pass it and see what I do. And then I'm going to do the 250 and see if I pass it and see what I do. We're always pivoting, you know, obviously at Rocket Scooter to show off, you know, our partner relationship or other platforms, other tools. And so, you know, this is something I'm doing just to do. I haven't really decided what I'm going to do next. I did want to do an options challenge, kind of can the other futures challenge, and instead put that money in an options account and have you guys pick random tickers for me, and I just trade random tickers that you pick. Like you guys throw random stocks at me and I'll trade 5 of them. I'll let y'all pick and then I'll see how well I can do with y'all picking the stocks. Right? That I think is a really fun challenge. It'll make it even double hard mode for me than just trading futures. So the idea is like if I'm going to be trading futures and showing ETF, then I don't need to be trading 3 futures accounts on one stream. It's going to be very futures oriented. Since we're, you know, a universal platform, we mostly cater to the options and stock traders more than futures traders. So I need to get back to showcasing options and stocks if I'm going to be doing ETF. So I'll probably just keep the funded accounts and trade those. And then I'll take my TradeAbate account that I was trading before I did the ETF and dump that to a Webull or something and just trade options. I think that's what I'm going to do. Everybody go to the Discord. We'll be starting in about 15 minutes. We'll see you in a little bit.